Welcome. This is Earnings Edge. I'm in conversation with the MD and CEO of CEAT, Arnab Banerjee. Mr. Banerjee, good morning and thanks so much for joining in. It's what looks like a fairly steady quarter. Can you take us through how you assess this quarter gone by and what we can expect going forward?
Yeah, we are pretty happy with the robust results. Our volume growth has picked up momentum. We've grown by about 12.5% in volume, led by international business, which has grown very well at about 25%, followed by replacement and then OEM sales. There's a small drop in gross margins by about 2%, primarily because of raw material hike. And there's a slight erosion in selling price, which is primarily in international market. So we are holding steady margin, and we had a good operational efficiency on the cost side, which meant that the impact on EBITDA was not totally passed through, and we have a minor drop in EBITDA margin vis-a-vis Q2.
Right, Mr. Banerjee, can you tell us a little more about how rubber prices are panning out, what you've seen through the previous quarter gone by, and also what we can expect going in, thereby perhaps some impact when it comes to your operating margins?
Sure. So Q3, we saw an escalation of overall raw material basket. It escalated by about 2.5%, roughly. And as we over Q2, and as we speak, there is some bullishness on the rubber prices. But on the other hand, the crude derivatives are trending lower. So overall, we feel that Q4 prices will be more or less at the same levels as Q3. There'll be no a significant movement either ways vis-a-vis Q3.
Okay. Well, looking ahead, can you give us an idea about the outlook that you have in terms of volumes going in, and also what segments are actually perhaps showing a little bit of an outperformance? What are the segments that you are expecting for a catch-up to play through?
The market-wise, I think in the OEMs, you're aware of the growth rates of various segments. Two-wheelers growing well, scooter very well in scooters growing much better than motorcycle, and four-wheelers also doing well. SUVs doing much better than sedans, and commercial vehicles also high single-digit growth. That's in a sense the translation into replacement is also pretty steady. We have had strong single-digit growth in the passenger car tire market. Two-wheeler market also, mostly scooter. Scooter has grown better in replacement as well. And low single-digit growth in the truck bus tire market. So as you know, CEAT is more focused on the passenger side, and we have been gaining share in the passenger car tire market. We have gained share in Q3 over Q2. We have gained share in the two-wheeler market also Q3 over Q2 in replacement.
All right. And Mr. Banerjee, a quick word also in the replacement markets against, of course, your exports along with OEM. How are things panning out at the moment? We are looking at the mix, of course, which is the largest with replacement. But going forward, do you think you could see a little bit of change?
So our replacement YTD is about 54%, and 18% would be the international business, and about 28% would be the OEM business. Increasingly, we would like to push our international business higher than the current 19% to over 25% over the next 2 to 3 years, as I have been maintaining. So a big push on international saliency is going to happen. And it is also margin accretive overall, the international business. And to that extent, there'll be a squeeze on the saliency of OEM and replacement.
Okay, Mr. Banerjee, we'll leave it at that. Thank you so much for joining us and taking us through the quarter's earnings as well as the outlook. We wish you the best for the future. Thank you.
Thank you very much.